Hi, this is Ant here with a weekend edition of the Bulletin Board Heroes. It is Saturday, the 3rd of September. Starting on with the FTSE 100, where we were saved in terms of the market not breaking the two-year uptrend channel, which was, I suppose, around the 7150, 7200 zone. These things are always a bit grey, but if you can see that there from back in March 2020, the price channel bounced off. We bounced off that. And decent close to the week, at least off the danger list. The low, I think, over the week down to 71.31, but looks as though that line there around just below the 7200 level. Above 7200, looking for the 50-day moving average initially, which is up there at 73.35, and then the 200-day moving average just above that, just under the 7,400 level. It's slightly disappointing that the 200-day line is now sort of curling down, so that rather kills our golden cross that we were looking at just a couple of weeks ago, or the run-up to a golden cross. But the positive here, and you need to look at positives in these markets, is that once again the FTSE bounced off the RSI, or just under the RSI 30 zone, the oversold zone. Then we saw that obviously last week, then in June, and then February and March as well. So a decent signal. Normally there was another dip down towards RSI 30 back in November, and also basically September last year. So very much worth looking out for that, even if you're slightly out. You know, you're buying stocks at 100 points or 50 points off the low, that is not a bad thing to do in terms of the blue chip area. Best case scenario at the moment is that we would remain above the 7200 area and head up towards 7600, which is the April resistance line projection. Worst case scenario is that maybe by the end of next week we're back down towards 7000, which would be the floor of that falling trend channel from back in March. But at the moment, the bulls at least ended the week on a reasonable note. On to Bitcoin, which has died a death in many ways. If I get the right chart up, which I will in a second, here you can see that it's still in this and we're unlikely to break out of this falling November trend channel for quite some time. We've got a falling 50-day moving average as well as a falling 200-day line. The falling 50-day moving average, that's up there around 22,300. Recent resistance around the 20,500 level, and that just leaves the early July support area around 19,000 as the potential bottom of the range. RSI not helping very much either, apart from the fact that we did bounce off our RSI 30 just towards the end of August. Only really back above the 50-day line, 22,300, or maybe up to the top of that November resistance, or the falling trend channel there, 23,100. Really breaks the pattern and also averts the risk of a fresh leg to the downside below 19,000. Moving along to the stocks and starting off with a rather quiet situation, even at the best of times. African Pioneer, here the inclusion just on the basis that at a slightly lower low there for August, towards the what's that, the 1.8 pence area. Bullish divergence there, so that the market, or at least the momentum, they're slightly positive, and we closed basically on the 50-day moving average. That gives us a chance at least of a retest of May resistance towards 2.75 over the next few weeks, but obviously not the most liquid of situations. Slightly more liquid is Bango, the amusingly named Bango here. Quite an interesting situation in the sense that we had a June bear trap from below the May support at 150, and that's bear trap gap reversal. Then we managed to break above the 50-day moving average, but have another bear trap below it at the end of last month. But the current situation looking quite healthy, little bull flag there, and all we need now is an end-of-day close through the £2 level to potentially give us a move to the top of that broadening triangle from November as high as £2.50 by the end of September. All of this backed by a bullish divergence line, and especially that last bear trap dip, we just almost exactly hit the bullish divergence line. So it's a nice signal there. The unfilled gap to the upside there, the second sign that the bears are being caught on the hop, and we can now see a reasonable push towards the £2.50 area by the end of the month. Personal favourite of mine, at least on a charting basis, is Cleantech Lithium, largely because it's behaved itself over the recent past. The rally here started off with a bear trap below May support around the 21 pence level. We went just below 20, and then from then on it's been almost up all the way. Bit of consolidation over the second half of August, but looks like that's over, and above the 33 pence area, at least above the 200-day moving average of 31 pence, let's say. We're looking for 50 pence at the top of a rising trend channel from April, and that could be seen by the end of this month. Onto a stock I don't think I've covered before, but it's quite intriguing actually. Hercules Site Services hasn't exactly caught the imagination of investors just yet, but maybe it will over the next few weeks, or maybe by the end of September. What you can see here is a bit of creative charting. It looks like we've got a rising trend channel there from back in February, and the top of the channel there heading towards 90p, which would be great. Maybe that could be seen as soon as at the end of next month. Nice little build up here over recent weeks, and the view here is that we could be heading for a golden cross scenario. End of day close above the June peak is what we're looking for. We're just around that area, so maybe 60 pence plus on an end of day close basis could take us to 90 pence by the end of next month. And I like that sort of flat basing that we've had over recent months as well. Looks like this stock has finally taken up all the slack over the summer and late spring. Moving along to Jubilee Metals, where the mystery as to the disconnect between the fundamentals and the technicals continues. But at least over the week, it looks like we finished our shakeout that we had, shakeout below 12 pence and below the old July support for the shares around 13 pence. So weekly close above that, and that suggested at least initially we could head for that resistance line there from April around 14 pence, and maybe by the end of the month we could be up to around the 15 pence area, which is the area of the 200-day moving average. In fact, really would observe a bit more than that, but let's go for a conservative target there around 15 pence, and also flag the fact that there's been a very swift bear trap rebound at Jubilee. Kinovo, one of the recent risers, and continues to be remarkably strong looking. We've managed to have the week above the top of that gap down in May, so the gap close buy signal, which is always appreciated, and above 34 pence. We're looking for not only the 50 pence area, which is November resistance, but also as high as the top of this broadening triangle from this time last year, as high as 80 pence. Maybe maybe as soon as the end of next month. That would be rather ambitious, but stranger things have happened. Only back below 33 pence or so, and certainly 30 pence, but the hard stop there on that situation. Moving along to Metal Tiger, which has occasional appearances here. The good one in terms, or the good news in terms of the recent past, is that we're back above the old March support there. That was around 17 pence, and above that looking for the top of broadening triangle from December as high as 25 or 26 pence by the end of the month. So a nice turnaround there. Petroneft is the next contender, and here you can see there's been a gap. It looks like sort of an exhaustion gap down, so a bear trap, a reversal there of the old support there around, what's that, 0.88 or something like that. So looking for the shares to with the bullish divergence that we've had, so the low for September, but to higher RSI trace to head back towards the 1.2 pence area, which is where they were at the beginning of last month. Obviously, if that is only valid if there are no fresh lows below 0.6, but above 0.6, looking for 1.2 on a rather illiquid chart there at Petroneft. Onto a stock where there was one or two mentions on Twitter, which seemed to be quite exciting. Also, what's quite exciting here is that the extended bullish divergence line that we've had here since June shows momentum building behind a turnaround, maybe a bit of accumulation in the stock as well. And what we can say and do now is really look towards this resistance line that's been broken, perhaps as earlier as back at the end of last month, so like maybe a week or so ago. Very strong close there on Friday, with the shares opening at the low, closing at the high, and on the 50-day moving average. So it does look as though the shares could return to perhaps the area of that gap, initial June gap down at 34 pence over the next couple of weeks. and especially powered by that very strong-looking bullish and multi-tested bullish divergence line. Stop loss there, obviously, just back below recent support and just the Friday low around 26 pence or sub 26 pence for that stop loss. On to Upland, which had a good update during the week and had a rather ambitious target there up to 0.4. That looks like that could be done pretty soon for these shares, maybe by the end of the week, even as soon as the end of the week. The other situation is that we're looking at potentially above 0.4 for the shares to head much higher than that, so maybe towards 0.6 or so, which was the resistance area on the way down. Finishing off with Westminster Group, which seems to be gathering new contracts almost by the day. That means that has delivered a trend change, so we've broken that November resistance line and the 50-day moving average around 1.25. But 1.25 initially, maybe by the end of this month, up to 2.3 or 2.4, which would be a real result and a real relief, I suppose, for holders of the stock. But there has been a pretty strong bullish divergence line there. So even though the lower prices, but the RSI never going below that 10 level on out of 100. So that is quite impressive. And as I said, above 1.25, we should have at least a reasonable recovery there over the near term. That's it from me today. More updates during the week.